So, with that said, let's get going. Welcome to today's webinar featuring Fair, the auto warranty and tech company that Canopy Connect, has recently partnered with. With me today is Clint Hauk. He is the VP of Insurance and Distribution here, former uh, agency agency owner. You moved into tech, um, into ventures, into all sorts of things. And now you are over at Fair Warranty heading up their insurance
Yeah,
side
yeah.
of things. Yeah.
I joke that the only seat I haven't sat in our industry is claims, and that's because I interned in claims and I saw what it took to be a successful claims rep and claims leader, and that is a skill and talent all unto its own. So yeah,
Yeah,
excited to be here.
certainly.
Appreciate everybody jumping on.
No problem. Yeah. So for those that don't know, Fair is an auto warranty company. They're providing mechanical breakdown coverage. Today, Clint's going to go through and talk a little bit about that program, how it works, and also showcase a little bit of how the sort of technical side of the integration works and how it can really benefit you potentially if that's a path that you decide to go down, if it's something else you can offer and make a little more scratch.
There we
Clint, I'll
go.
hand it over to you.
All right, fantastic. I will share my screen here. We'll get rid of this. There we go. Perfect. So, as Ray mentioned, Clinton Houck, I have built my entire career in the insurance industry, predominantly in the P&C space. I've worked for carriers, I've been an underwriter, I've been an agency owner, I've built insurtechs. I have sat in a lot of roles and worn a lot of hats in this space. And one of the common things that we have heard in our industry over the years is that auto insurance has become commoditized and that every agency and that every carrier sells and offers the same coverages, the same policies, and there's zero differentiation. I've also experienced those customers that come and say, we want full coverage, which is a wonderful term that nobody can truly define. And one of the big things that always jumped out at to me was when a customer thought that auto insurance covered everything for their car, predominantly when it came to things like sudden breakdowns of their vehicle outside of an accident. And you would get that claim submission and that customer would then be upset that insurance didn't properly cover it. And so that's where Fair comes in. We are the only warranty carrier specifically built for the property and casualty industry. And we have designed ourselves as a complementary product to auto insurance. And so wanted to just walk through that a bit here. And again, please feel free to shout out any questions as we go, and we can adjust and answer those on the fly. So why fair auto protection matters. 58% of individuals across the country, if they had an unexpected $1,000 auto repair bill, they would have to go into debt to pay it. Car insurance is great. It covers those major losses if it's due to an accident. But again, if they have an engine repair, if their transmission goes, if their AC or heating breaks, all of a sudden there is a gap in coverage for them because there is no coverage under the auto insurance. And that's where something like mechanical breakdown coverage comes into play. Now, traditionally, most warranties are sold through car dealerships, and as a result, the industry has gotten a poor reputation because you have folks that aren't true risk advisors trying to sell a product they don't truly understand because really what they're doing is selling a car. Where we believe that that risk advising, that mechanical breakdown coverage and warranty coverage should live inside of insurance agencies. And we have found that with that 40% market adoption, if consumers could trust who they were purchasing from, it would be more around 70 to 80% of consumers that would be interested in mechanical breakdown protection for them. So a little bit about FAIR and how mechanical breakdown coverage and warranty works. Our policies, our contracts cover up to 1,000 plus parts inside of a vehicle. Inside of our contracts, we also have additional benefits like emergency road service, vehicle rental, trip interruption, just like the ERS coverage that is on auto insurance. We also offer that right inside of our warranty products. The other nice thing, really, for insurance agencies and where our early partners see a lot of value is the retention benefit. We just came out of a really hard market cycle with a lot of 30, 40, 50% rate increases. And we know that every 6 months prices can change. 16-year-old drivers come in, accidents happen, people move, and you can't control the rates of the products that you're trying to sell. With warranty, the nice thing is this is a long-term coverage. The average term for our customers are anywhere from 3 to 5 years worth of coverage, but we have coverage anywhere from 1 year up to 10 years, which means they get to lock in that rate. It's a guaranteed price, and their price will never go up during that time period, regardless of how many claims they have, regardless of if there's different drivers or they move locations, because coverage is specifically on the vehicle, which is a fantastic way to be able to maintain a relationship with a client, regardless of if their auto insurance or their other insurance products change prices. They're not going to find a better price for their warranty coverage because warranty is based off of the year, make, model, and mileage of a vehicle. So it's never more affordable to purchase coverage than today because tomorrow their car's a day older. It's 100 miles, there's 100 more miles on the car. And that result then drives up the cost if they would ever shop their warranty coverage. Some things about Fair that differentiate us from other warranty providers out there in the marketplace. We don't use any TPAs. There's no third-party administrators that are getting paid to deny claims or optimize payouts. All of our claims team are in-house and are full-time employees for us. We also have no restrictions around where people can get their vehicles repaired. So as long as it is a licensed garage, they can take it to the garage down the street. They can take it to their car dealership. A customer can take their car anywhere they want for it to get repaired. And we're going to cover those costs. And we pay the shops directly. So customers don't have to worry about a reimbursement process that other warranty companies or products offer where that customer has to wait for a check to come to us. We will pay the shop directly. All the customer has to worry about is their deductible, and they're right back on the road. We have a standard SLA to settle claims within 24 hours of receiving all the information. Right now, we're doing it in a matter of an hour or two. So we have a really rapid claims turnaround and a great experience, which ultimately is the value of a carrier partner, is that we deliver when the claim occurs. Important things that we always care about as agency owners. How do we make money and what does that look like? So the average customer for a personal auto warranty coverage, and we cover both personal exposure and commercial exposure. The average personal warranty cost is about $2,500 for coverage for 3 to 5 years. We pay a base commission rate of 20%. Yes, 20%. We are not a PNC carrier. We have strong commission percentages for our partners. We also have additional contingency and profit sharing of up to 7.5% on top of that if you hit production growth goals with us and you hit target loss ratios as well. We also split out our contingency program that says, look, we want to make sure that you can earn that contingency. And if it's just on growth alone, we'll make sure that you can earn that 5%. And then you get that 2.5% additional on top of that for those loss ratios, because we do believe that underwriting profitability predominantly is responsible of the carrier or for us. For those that are more technically savvy, and this is the value that we got to work with Canopy Connect here, we have seamless APIs, open APIs. So we've integrated to make it a one button click experience, and we'll demo that here shortly to show you how easy it is to quote Fair Warranties product. And the nice thing is that very easy cross-sell conversation as you're going through the auto insurance sales conversation and you get to comprehensive and collision and you're saying, and I'm selling insurance to Ray and I say, hey, Ray, for your car, on your insurance, comprehensive and collision pays to fix your vehicle if it's damaged in an accident. What would you like your deductible to be? By the way, if you just have a sudden breakdown, that engine goes or that transmission goes, and you have a $3,800 repair bill, that's not covered under auto insurance because there was no accident. We can add on mechanical breakdown coverage. Would you like to consider that as well? And that's it. That's the cross-sell conversation. So you almost think of us and present Fair Warranty as an additional coverage in onto your auto insurance versus trying to have a completely separate sales conversation. It makes it very seamless from both a quoting and a conversation standpoint. To that point, we know that this is a new line of business. We know that we're a new carrier. So we provide a lot of support for you and your staff to be able to integrate Fair into your agency and into your sales conversations and helping protect your clients. So we have the standard training documentation that every carrier offers, which is the underwriting guidelines and the technical system walkthrough. But we also have sales coaching. We predominantly sell through two channels, the insurance industry and the credit union channel as well. So our credit union channel, we actually have an in-house sales team that helps support our credit union partners. We have taken sales coaching, live sales calls from real clients, and we have made them available for you and your team to be able to listen to understand how to effectively sell this product. We have sales coaching guides as well. So not only do you have the product, but you know how to translate it into layman's terms to help customers see the benefit and value and how to close those sales. We also have interactive demo systems, which you'll see right now. So you can practice and you don't have to worry about messing anything up inside of a live environment or with an existing customer's policies or accounts. You can practice as many times as you want inside of our demo systems without any concerns. I will send out this presentation after the fact, but my contact information is here. If you're interested in further conversations after this demo, please reach out. Happy to talk through an appointment with you. So at this point, I think I saw a couple of messages come in, right? Any questions worth addressing at this moment?
Yeah, Will had answered one of them, but I think it's worth asking again, is this product available in all 50 states?
Yes, so currently we're live in 47 states. There are three states that we're not currently live in, which is Massachusetts, California, and Florida. We will be opening up Florida here by the end of Q1. We're targeting mid-March, and we'll have California later this year. And Massachusetts is the little state with a lot of challenges, so we don't have any plans in the near future to open up that state.
Got it. And then Shane just asked, are there any age or mileage limits to qualify for the plan?
Yes, so currently we will cover vehicles from 2014 and newer, and we cover up to vehicles that are under 150,000 miles on the vehicle at this time. But again, we do cover both personal and commercial risks. So whether it's rideshare, whether it's your contractors, your utility vans, your pickup trucks, we have coverage for across the industry for that.
Are there, I'm, I'm, I have issues getting my oil changes on time. Are there certain like terms of the contract for like maintenance negligence and a claim comes up, or are those some things to consider as well?
Yes, so inside of our warranty contracts, there is an expectation that an individual is going to properly maintain their vehicle as defined by the manufacturer of the vehicles. So if we do see that a claim is caused due to a lack of care following the guidelines of the manufacturer, that could be a reason for claim denial or partial denial. However, if there is a mechanical breakdown or a failure of the vehicle that is not due to following maintenance, that is fully covered.
Got it.
And we cover the actual posted labor rates of the garages. We don't try to negotiate down or lowball repair facilities. So that's one of the reasons we settle claims very rapidly. We pay sales tax and charges on top of that, and we pay for the cost of fluids if those fluids are lost due to that claim experience.
Got it. Got it. Um, let's go. Shane asked another question. Is the plan transferable? Like if the client sells the car, can the
Yes.
policy go with it?
Yes, so this is a great benefit. So consumers are able to transfer the warranty coverage to a new owner if they do sell their car. So it is a nice added benefit that they can pass along. We've also designed our products, another differentiating value. Car dealerships usually wrap the warranties into a loan, a vehicle loan, which makes it really hard, if not impossible, to cancel that coverage or get a refund if you cancel early. We have designed our product and we believe in selling through the insurance channel to make it easy to meet the needs of the customer. So if the customer would sell their car, they would total it in an accident, or for any other reason they would decide to cancel, we would give them a prorated refund for any unearned premiums.
Got it. And um, do the buyers or the insureds do they choose the term and duration up front, or is it like, you said $2,500? That I assume that was like per year. Is that just kind of a
No, so that $2,500 is over the entire term. So,
okay?
so the nice thing about that is, yes, the coverage for brand new vehicles, we see monthly premiums come in around $30, $40 a month. Now, the older the
Okay,
vehicle, you get into those 2017s, 2018s, or you get into the more foreign or exotic vehicles, you will see those costs go up. It's all based on uh, uh, industry standards of what the cost of or the terms of breakdowns and the average cost of repairs are on a vehicle by vehicle basis.
got it. Got it. Um, so that 20, like what you had showed with the averages, that was $2,500 for a 3-year term
Correct.
of
Correct.
coverage.
Yep.
Okay,
And again, that's an average rate. There's significantly more competitive rates, and there's more expensive rates as well. Again, depending
certainly.
upon the vehicle and the mileage coverage you'd like.
Yeah, but they have to pick like, oh, I want 3 or 5 years or 10 years. You said up to 10 years of
Correct.
coverage.
Correct.
That's something they choose up front. And then is there then because Shane had asked if there's a refund component now. If I signed a 5-year term, I sell the car after 2 years.
Mhm.
Um, do I get that back or the
Yeah, so we will calculate a
unused?
prorated refund based off of how much mileage is left in coverage and how many years of coverage is left. And we
Got
have
it.
actually three different levels of plans, and you'll see this in the demo as well. A good, better, best. So think of our base plan as really just our engine and transmission with infotainment systems, the electronic systems in these cars.
Mhm.
We've got a middle plan that covers some electrical and additional components. And then we have our premium coverage, which is that true bumper to bumper 1,000+ parts.
Got it. Got it. Yeah, no, it's a good delineation because I mean, they're just moving computers at this point, you know.
Yes, yes, absolutely, absolutely. So let me jump into the demo here,
Yeah,
and
let's do it.
we can keep answering questions as we go. But you'll be able to see some of these things we're talking about, coverages and deductibles and selections. So this is inside of Canopy Connect. Awesome platform here. And we're really excited to be partnered. And so we'll show an example of, hey, you've had a prospect that has filled out their information, and we've got Clark Kent here, um, glasses and all. And we see his deck pages come in. And just like with other integrations, sending it to other raters for your comp raters for insurance, you'll scroll down to the integration section. Now, this is a sandbox environment, which is why you see it multiples here, but you would only see one, this top one for you as an agency owner. All you need to do is select the auto policy that you'd like to send over for the vehicle, and it sends it to Fair. So I'll give this a second. And the nice thing is this already pre-populates all the information from Canopy Connect. So we already know the vehicle. We already know the mileage. We already know the ownership of this car. So we're already halfway through the quoting process. The only underwriting questions you have to answer then is these sliders right here. Is there any modifications to the vehicle? And then you hit your next. Information about the client is already pre-populated, so you're right into the quote screen. Now, this is an older car. It's a Camaro, so there's likely to definitely be a need here for repairs in the near future for a car like this. But what you see is you're now able to select your coverage terms and your mileage. The nice thing about our platform is it's smart enough where we will only show the eligible coverage terms and the eligible mileage based off of the year, make, and model of that car. And additionally, you have multiple deductible options. Now, this is our sandbox environment, but for agents, you have options for 100, 250, 500, and $1,000 deductibles. Now, we are a vehicle service contract, which means we are not an insurance policy. So we don't have the same regulation and approval requirements by each individual state department of insurance. Why is this important? Because we believe in true partnership with our agency peers that offer our products out to your clients. So we can rapidly take feedback from you and iterate to improve the customer experience and your experience as an agency. For example, when we first launched, we only had a $100 deductible option. We got feedback from agency partners that they wanted deductibles that would match comp and collision offers. We were able to put these new deductibles into play and launch within 2 weeks. So we rapidly iterate based on the feedback of our partners to be able to build and expand to meet your needs and your clients' needs. You can see here are 3 different plans, and you can see at a high level the categories of a vehicle that each of these plans cover. I am not an expert in cars. I've never worked on my own car. I can't even tell you all the components or parts of my car. Good thing is you don't need to. So the nice thing down here at the bottom is we have a compare coverage button, and you're able to see for each major category of a vehicle, you can expand out and see what's covered under powertrain, plus, and premium. So you can talk through for a customer if they have a specific question of, hey, is my wheel cylinders, are they covered? And you're able to see that rapidly without having to keep that memorized. I will be honest, most customers don't ask about specific parts. If they do ask about it, it's probably because they had that break in the past and they had a poor experience and they want to make sure it's covered. So it's not common that you get those questions, but if you do, we have the tools right at your fingertips to be able to help answer that. Once that customer selects the years and miles that they prefer, then in the plan, you hit next and you're already on the checkout page. Fill in the billing information, payment information, submit and pay. Instant quote and bind. You have 3 different payment options. A customer can pay in full, they can pay over 4 monthly payments, or they can pay monthly. Now, one of the nice things you'll see about this is you see that it's 3 years of coverage, but it's 18 monthly payments. Customers pay monthly premium and they pay off their coverage halfway through the term. So the nice thing here is you can talk to that customer and say, look, you're gonna have to, you have this monthly premium, you'll pay it for a year and a half, but after that, you don't have to pay anything else and you still have coverage for another year and a half. So it's a great benefit for that customer that they get to pay off early and then they continue to have that coverage. On our side, the reason we do that is just in case all of a sudden that customer, they think they drive about 10 to 12,000 miles a year. All of a sudden they start driving a whole lot more. We don't want to become a debt collector and try to chase after somebody after they've already exhausted the benefit. But again, we'll prorate any refunds if a customer does decide to cancel early. The other big piece here that we highlight is when a new customer comes on board, to help avoid fraud and have a few bad actors drive up rates for everybody, we do have an initial wait period of 30 days and 1,000 miles. The reason we have this is unlike auto insurance, there are no MVR reports. There are no clue reports for loss histories. Warranty doesn't have that type of data or documentation out there in the industry. And so our way to make sure that we're not taking on bad risks with hidden exposures is to have this initial waiting period. That also means that if customers do have buyer's remorse, they have a full 30 days where they'll get a full refund back if they do decide to cancel. Or let's say they've talked to you ahead of time before they've went to go buy a car. They purchased that warranty for you ahead of time because you have that proactive customer that we all love. If they end up not getting that vehicle or that purchase doesn't go through for some reason, we're able to cancel that and give them a full refund. So I'll pause here. This was the quick run through of our demo from a quoting experience. Any other questions that came up during the conversation?
I think we covered some of them on the wait period just now. This was asked and answered, but we'll ask it again. Just would agencies have a minimum annual production standard to meet if they're appointed
Yeah.
with you guys?
So for us, again, as a former agency owner, I know what it those production agreements are that carriers have these sign. In our mind, we recognize we're a new carrier and we're a new line of business for you. So we don't have production minimums that we're looking for. What we're asking for is engaged partners. So for successful implementation, one of the things we do with new partners is we have an initial coaching call once a week for 30 minutes for the first couple of weeks of onboarding. And our ask is that our partners show up to those calls weekly. Bring your team and we will do practice role plays. I will go through the sales conversations with your team, coach them how to sell auto insurance and pivot into the mechanical breakdown coverage with Fair. We'll have them role play back. We also have the interactive learning management system where we'll send you reports so you can see that how that your team has actually completed the training, who has and who hasn't. So we just ask for that engagement and partnership with us as we partner with you to make this successful.
Got it. Um, Question came up here on integrations. Obviously, we have a great integration uh, from the Canopy Connect to Fair, but from Fair, once it's written, does that sync over to CRMs, AMSs, and the like?
Absolutely. So every agency will get an agency portal. And this is what your agency portal looks like. It's very simple and clean. You'll see all your active contracts. You'll see your prospects, your agents, your claims. We also have a developer section here where you can see API documents for full quote and bind, for full book of business download. We have documentation for claim submission. You can fully integrate and embed our product into your tools and systems, and you can create as many integrations as you want. We also have an in-house engineering team that will help you through that integration process as well. One other thing
Yeah.
I will mention that's a nice perk here is this quote that we started here for Clark Kent. You can copy this URL. You can email him this quote link. You can text him this quote link, and Clark can pick up this quote right where you left it off. And he can actually go out and purchase and bind coverage all on his own later in the evening or when he's had a chance to look at it. Or Clark may go in and update the quote itself, maybe change some of the coverages and play around with the deductibles. When he does that, that automatically updates the quote on your side as well. So you're able to go into your prospect section here and you can see and go find all your leads and you can see everything that has been updated in the quote for coverages and selected plan and pull up that quote link at any time to be able to complete and bind that coverage. So we make it a seamless handoff back and forth between you and the client as you're helping them select a right coverage for their vehicle and for their needs.
Got it. That's great. That's a nice touch there. Um, you said 2014 is currently the oldest you'll go back. Is that just like a 12-year look back, or is that just kind of currently the
That's currently we will be continuing to expand to older years as well
okay,
as we go. We build that out based off what we see for customer need and client need.
okay.
There's a certain tipping point where the actual cash value of a vehicle diminishes so greatly that the cost of
It's
coverage
not,
doesn't make
yeah,
sense. So we don't go any further back than that. We don't want to be manipulative in any way and uh, charging a customer more than their vehicle's worth.
sure, sure. No, I had an older car that reached a new transmission need, and suddenly there was a 8 grand out of pocket, expense that I had, and I had to sit there and weigh the decision of like, okay, 8 grand, if I go sell this right now, I can only get 7 for it. I don't even know if it's
Yes.
worthwhile. And I know we deal with that all the time in insurance, just at how
Yep.
expensive like repairs cost and for, on the if there's an accident on the body repair costs and things like that. But
Absolutely.
um
To that point, Ray, real quick about claims. So, another feature that we have built into our platform for our agency partners is we make the claims experience completely transparent. in property and casualty carriers world, if a customer calls the carrier to file a claim, you don't see any of the claim notes as the agency. If that customer calls you to complain about their claims experience with that carrier doesn't see any of your notes that you have from that customer. What we have done is created a live feed where all claims notes are actually available and viewable by you as the agency partner. If you get more information about a claim or a request from a customer, you can add in claims notes as well. That'll go right over to our claims team. So you're always completely up to date and up to speed on what's going on in the claims process. So you can be that true hero and trusted advisor all the way through that customer's experience.
Got it. Adam's got a good question here, a little bit related to my earlier question about like regular maintenance and all that stuff. A lot of people aren't fully aware of the manufacturer's guidelines or strict adherence, at least, to those maintenance things. So, what percentage of claims are rejected due to these kinds of things? If you have
Yeah.
that offhand.
We haven't had any claims denied due to a lack of maintaining a vehicle. Really, the only rejections have had so far from a claim standpoint is because it wasn't covered under a lesser plan that client had selected at terms of binding.
Yeah.
Really, the body shop or the garage would alert us that says, hey, we think that damage is done due to a lack of negligence around maintaining the vehicle. And then that
Mm,
causes us to look deeper into it. But we
I
take
see.
that feedback from the garage itself.
Got it. Got it. And then Shane asks, if a client uses the plan once in the policy term, can the plan still cover for additional claims after that? It's a one and
Absolutely.
done.
There is no maximum number of claims that can be submitted. We would just, if there was a claim where the cost of the claim is greater than the value of the vehicle, we would pay out on the value of the vehicle. Otherwise, we're going to pay to cover those claims.
Cool. And then Jeremy asks, can a client upgrade their policy to a higher level later on down the line? A year into their 3-year term, they go, man, I probably shouldn't have cheaped out on the powertrain plan. I should go up to the premium.
Mhm. So at that point, we would have to re-rate them because their vehicle is a year older, and we would have to update based off of the current mileage on the vehicle. However, if they're within that initial 30-day window and they want to upgrade their plan during that point, we can make those adjustments and upgrade the plan and charge the new associated premium with the upgraded premium or the upgraded plan request.
Got it. Got it. Well, that's all the questions I have for now.
Great. Well, fantastic. I really appreciate everybody's time coming on here today. Again, I'll make sure that we get out this presentation to you all, but please feel free to reach out to me directly, either through phone or my email. I'm also very active on LinkedIn. You can shoot me a message there as well. Happy to answer any questions you have and partner with you all to build our businesses here in 2026.
Yeah, thanks so much, Clint. Appreciate you coming on, sharing this. I think it can be a really good opportunity. And if you guys are interested, well, you can contact Clint. We'll send some contact information out in our follow-up emails as well. Recording will be coming out shortly. Thanks,
Hey, thank you
everyone.
so much, Ray. Appreciate you having me.
All right, bye,
All right,
Clint.
see you guys.